welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. After Saturday's special session, India surpasses Hong Kong to become the fourth largest equity market by value of listed shares. But the edge is short-lived. The Sensex and the Nifty end Tuesday's session around 1.5% lower as pre-budget jitters and FPI selling spark a sharp sell-off in morning trade. Mid-caps dropped nearly 3%. Generic drug maker Cipla delivers better than expected third quarter numbers. India revenue jumps 12%. US revenue spikes to a record $230 million. The stock up over 7% as net profit surges 32%. The Zee Entertainment stock tanks over 33% a day after Sony pulls the plug on the proposed merger. Over 7,300 crore rupees in investor wealth wiped out. Multiple sources tell CNBC-TV18 that Sony never formally asked for Puneet Goenka's exclusion from the merged entity, but Zee's troubles could get worse. Sources add SEBI's investigation into Zee has revealed that financial irregularities of the company may be as high as 800 to 1,000 crores. Prime Minister Modi announces a scheme to electrify 1 crore homes by encouraging solar rooftops, as the move will not only reduce electricity bills for consumers but also push India's mission to achieve self-reliance in the energy sector. IREDA tells CNBC-TV18 that REC will be the nodal agency responsible for implementation. EdTech startup Byju's losses nearly doubled to a whopping 8,245 crore rupees in FY22. The management says its recent acquisitions, White Hat Junior and Osmo, have contributed to 45% of the losses. The filings made after a 22-month delay also say higher expenses negate a near doubling in revenue. Devotees throng the Ram Temple in Ayodhya as it opens to the public. Police and temple administration on high alert after devotees who'd been waiting outside the temple overnight broke past security barricades in their rush to get inside. EPFO adds around 14 lakh net subscribers to its membership in November 2023, marking an 8% rise from October levels. But new formal jobs in November fell to their lowest in 30 months. The addition of young people and women subscribers also registers a monthly decline. Women and young voters are said to be the deciding factor in the Lok Sabha elections. Delhi, Bihar, Karnataka, Uttarakhand and Andhra Pradesh see more young voters in the final electoral roll for 2024 as compared to 2019. The number of women voters outnumber men in Tamil Nadu, Andhra Pradesh and Manipur. Other states also see a significant surge in women voters. 21 Israeli soldiers are killed in Gaza, marking the highest single-day death toll for the IDF since the war began. Israel's Prime Minister Netanyahu rejects Hamas's proposal to end the war and release hostages as his forces lay siege to Nasser Hospital in southern Gaza. The Gaza death toll nears 25,500. Let's start with the market action of the day. The markets did open on a firm note. Remember, we were closed for trade on Monday, so started trade strong on Tuesday after Saturday's special trading session, which had pushed India momentarily past Hong Kong to make it the fourth largest equity market by value of listed entities. India's total market cap had risen to $4.33 trillion, exceeding Hong Kong's $4.29 trillion, according to Bloomberg data. However, this was short-lived. The Hong Kong stock market regained its spot in the global rankings when it resumed trade on Monday. That's when Indian markets were closed, and today's session has not helped India get back in the race. A bout of FPI selling as well as pre-budget jitters not only reversed early gains but have also sent our markets deep into the red by the close of trade. So let's take a look at the Nifty and the Sensex. The Sensex lost over 1,000 points today, ending 1.5% lower. The Nifty down 333 points, also losing about 1.5%. The Nifty Bank down over 2%. The Nifty mid-cap sharp cuts coming in there, 3% lower today. Caution as traders watch for earnings reports to select fresh triggers, also adding to the pressure today. Now, one of the big movers in today's session was Zee Entertainment, and this was on the downside. The stock tanked 33% as traders reacted to news that Sony had called off the proposed mega merger. The fact that a legal battle may now be on the cards also has traders worried. The day's fall erased more than 7,300 crore rupees in investor wealth. But what exactly led to the deal being called off? Now, the Sony statement said that though both parties engaged in good faith discussions to extend the end date, they were unable to agree upon an extension. However, sources tell us that there is more, including perceived issues with corporate governance. Nisha Podar is standing by now to take us through the details. Nisha, what are you picking up about the negotiations that were taking place and the points on which both parties could not agree? What was the final nail in this deal's coffin?
That's right. It's an end to a mega merger proposed in the space of media and entertainment, which could have created a large $10 billion company. Now, remember that this is probably one of those dramas which played out in real life, which could be much more fascinating and much more thrilling than what Zee and Sony Studios can ever produce, I think. Now, behind the scenes, what we do gather from sources with direct knowledge is that Sony never gave a formal proposal to Zee on Puneet Goenka's leadership position, which it was uncomfortable with. It was only a verbal, informal proposal that was given to Zee. And to resolve this matter, Zee at first said, asked for extension till the SEBI matter is resolved. And on the other hand, they had given two important proposals, and all of them were rejected by Sony, which went ahead with the merger being called off. The two proposals included, first one being, let the merger go through in its original form and then jointly look at an independent CEO's position. And the second proposal was Puneet Goenka relinquishing the executive rights but retaining a board position on the merged entity, which when rejected was revised to a nominee board position. So all these alternatives were rejected by Sony, which went ahead with the merger process being called off. Now remember that the fate of so many investors in Zee as well as the two companies really hinged on an informal proposal, and the legal experts with direct knowledge on this transaction have shared that this route of informal negotiation was more of a commercial decision, more because a formal negotiation would have opened the entire merger process for a renegotiation and would have had monetary compensation probably for the other merged party to agree to some of the changes which have been sought. It is also pointed out by legal experts that the contract lacked any safety net or optionality in case of an eventuality of an unforeseen risk to the clauses that have been agreed upon in the original document, including Puneet Goenka's position as MD and CEO. We reached out to both the companies, but they have not reverted on our queries.
All right, Nisha, many thanks for joining us. And we're not done with Zee just yet. The troubles for the company may not be over with the deal being called off. CNBC-TV18 also learns that market regulator SEBI's investigation into Zee could point to financial irregularities of the company being between 800 to 1,000 crore rupees. That's much higher than the initially estimated 200 crore rupees. That was the estimate that SEBI had put out in its order that was under investigation. Yash is standing by now with more details. Yash, this is an ongoing investigation. Where do things currently stand? And the amount in question in terms of irregularities, that seems to be substantially higher than what was previously estimated by SEBI.
Well, that's correct, Shireen. So stock, as far as Zee Entertainment is concerned, struggled all day today because of course, the merger news falling through. But moreover, what we were given to understand from our sources is that the investigation which market regulator SEBI was doing against the promoters of Zee Entertainment, that is Puneet Goenka as well as Subhash Chandra Goenka, is in its final stages. As far as the timeline is concerned, what sources have indicated to CNBC-TV18 is that in about next 2 to 3 months is when SEBI is expected to complete its investigation against the promoters of Zee Entertainment. Once the investigation has been completed, then of course show cause notices to the concerned parties will be sent by market regulator SEBI, post which orders will be released by market regulator SEBI against the promoters of Zee Entertainment. Now, what has been the most surprising aspect out of our conversations with the sources is that when SEBI had started its investigation against the promoters of Zee Entertainment, the amount in question, which was the amount which was allegedly siphoned off and the promoters benefited out of it, was about 200 crore rupees. Now, as the investigations have progressed so far, that amount has amplified 4 to 5 times the original amount and has reached the number of 800 to 1,000 crore rupees as per our sources in market regulator SEBI. Also, what we've been given to understand is that so far in SEBI's investigation, the market regulator SEBI has been able to establish a case against the promoters, Puneet Goenka and Subhash Chandra. That is, of course, the investigation so far. And as I said, in the next 2 to 3 months, expect show cause notices to be released against the promoters of Zee Entertainment. We've written to both Zee Entertainment as well as SEBI on this particular development. Zee Entertainment declined to comment, still awaiting a response from SEBI.
All right, Yash, many thanks for joining us. Well, Axis Bank Q3 earnings have been announced, meeting street estimates in the third quarter. Abhishek standing by now to decode the numbers for us. What's the Axis report card looking like, Abhishek?
Well, a strong set of numbers coming in from Axis Bank, especially on the business growth. And if you take a look, even the PNL has meeting our expectation. Look at the deposit growth, 18.5% YOY and about 5.2% sequentially. It is higher than the sequential growth is actually higher than industry average of about 3 to 4%. Take a look at the loan growth, 22.3% YOY and about 3.9% sequentially. The 3.9% sequential growth is also on the higher side, and 22% means that they have gained a market share. So in terms of net interest margin, calculation shows that net interest margin might have declined because the NII is up 1.8% quarter on quarter, while your loan growth is at 3.9%, which means there is slight dip in the net interest margin, which is on expected line. Asset quality remains robust. Gross NPA ratio and net NPA ratio are the best that you are seeing in last 8 to 9 years or even more. In terms of operating profit, the YOY decline is seen, which was expected. Sequential operating profit growth is at 5.9%. Provisions have risen 26.2% sequentially, largely on expected line, given the fact that AIF related and other provisions are being made by bankers this time around. But no taking away from the fact that strong business momentum seen and asset quality has improved, which should get a thumbs up from the street tomorrow. We have Ashutosh Mishra of Ashika Stock Broking. Ashutosh, your first take on the results.
The result is quite good given the way they are managing their asset and liability growth. That's clearly indicating that things are moving in the right direction for the banks. And the benefit of the merger of the City Consumer is also, I think, now start getting reflected into their earnings, and that will be more prominent in the coming quarters too. So yes, things are moving in the right direction. We need to know about what is the progress on that front, and on the AIF part to understand that is there anything else to understand on AIF?
Well, Ashutosh, as you mentioned, it's with respect to business momentum, it's pretty strong. I have not seen any bank with 5% plus kind of a deposit growth on a sequential basis. So it's heartening to see that while others are fighting for deposit growth, Axis Bank has been able to deliver on deposit growth, especially, which is the raw material for the banking business. What do you make of the business momentum that they have seen?
Yes, this is a very important parameter at this point of time, that given the way they are able to grow the deposit base, and especially I think contribution is also start coming from the City acquisition on the deposit fund, not only from the credit card and fee income fund, but even on the deposit fund, because the liability franchise was quite good. But initially we have seen some contraction in that franchise, but I think the positive impact of that has started kicking in, and that may have helped the banks to overall achieve the much better deposit growth compared to the many other banks in the system.
Well, we also have with us Rahul Malani of Sharekhan. Rahul, your first take on the numbers that Axis Bank has delivered. It's, in line with what the street were anticipating, right?
Yes, the overall number are broadly in line with the estimate, with our estimates as well as the consensus estimates. One thing which you have highlighted is very true, that deposit growth sequentially 5% is one of the strongest in the sector. So we believe that this is one of the important factor, and the street was watching this deposit growth very keenly for all the banks, and Axis Bank has outperformed on this front.
Well, Ashutosh, one question on the valuation. What's your take with right now Axis Bank valuations?
So valuations looks quite reasonable at this point of time. Stock has seen some surge in the last 3-month period, if I so. But valuation looks quite promising. And given the impact, 2 points is very important to look at Axis. One is that the higher OPEX related to the City acquisition will start coming down in FY25. So earning growth will be relatively better than the many other banks in the case of the Axis. So keeping that in mind, I clearly think the valuation is quite attractive at this point of time.
Ashutosh, as you highlighted about the OPEX, the cost to income ratio has declined to 49.5% versus 50% plus in the previous quarter. Thank you, Ashutosh and Rahul, for joining us on the show. Back to you, Shireen.
Abhishek, many thanks for joining us. That's Axis Bank delivering in-line numbers. And as Abhishek was pointing out, the deposit growth at 5% is certainly going to be something to take heart from as far as the bank is concerned. Corporate earnings, the other big ones in focus. Generic drug maker Cipla delivering a good set of numbers that has investors excited. The Cipla stock hitting an all-time high after the company delivered its highest quarterly revenue and EBITDA margins. Net profit also ahead of estimates, up 32% year-on-year. The company has said the strong performance was aided by growth across geographies and in both its branded prescription and consumer health verticals. India revenue for Cipla up 12%. US revenue up to a record $230 million. That's Cipla for you. And speaking of results, EdTech giant Byju is filing its earnings report for FY22 a full 22 months after the results were due. And the numbers are not flattering. Losses have almost doubled to 8,245 crore rupees. The company blames a significant portion of these losses on its stressed assets like White Hat Junior and its educational gaming firm Osmo. Shruti is standing by now with the details. Staggering losses for Byju's. Shruti, take us through the numbers.
Absolutely. EdTech giant Byju has finally filed its FY22 financials with the Ministry of Corporate Affairs almost 22 months after the reporting period ended. In the filing with the Ministry of Corporate Affairs, the company said it clocked a 2.18x increase in revenue from 2,428 crore rupees in FY21 to 5,298 crore rupees in FY22. Losses ballooned 1.8x from 4,564 crore rupees in FY21 to 8,245 crore rupees in FY22. This translates into an EBITDA loss of 8,370 crore rupees in FY22 from 4,599 crore rupees in FY21. Expenses went up 2x from 7,027 crore rupees in FY21 to 13,668 crore rupees in FY22. The company has said that White Hat Junior and Tangible Play, that is Osmo, dragged its overall performance significantly. Now, White Hat Junior continues to bleed. It saw an EBITDA loss of 2,692 crore rupees in FY22, and Osmo reported losses of 924 crore rupees in FY22. Aakash and Great Learning continue to buoy the group's revenue. Aakash clocked a turnover of 1,284 crore rupees in FY22, and Great Learning has reported a revenue of 221 crore rupees in FY22. Aakash continues to stay in the black with a profit after tax of 90 crore rupees in FY22. Meanwhile, global investment management firm BlackRock, which holds less than 1% stake in Byju, has cut down the EdTech company's valuation to $1 billion from the high of $22 billion it fetched early to 2022. Now, sources tell CNBC-TV18 that the venture is also seeking to raise funds at a discount of more than 90% from its previous round to alleviate its financial problems. Sources also tell us that founder Byju Ravindran will participate in the share sale to retain his stake in the company and will use the proceeds from the share sale slated for next month to pay off vendors and stabilize the business. Back to you.
Shruti, many thanks for joining us. It's going to take a lot to stabilize Byju's given the financial position that it finds itself in, as well as its hunt for funds. The Employment Provident Fund organization, that is the EPFO, has added about 14 lakh net subscribers to the payroll data in November. This is an 8% increase versus the October figure. However, new formal jobs in November has fallen to the lowest level that we've seen in the last 30 months. Ritu standing by now with the details. Ritu, make sense of the data for us.
Well, Shireen, I'm going to start with the total new jobs that have been created in the formal sector, because those have fallen to a 30-month low in November. Just 7.3 lakh new jobs that were created. And this is the lowest that we've seen since the COVID year's low of 6.5 lakhs in May of 2021. Now, these are numbers of new monthly subscribers under the Employee Provident Fund, which has come in at 7.3 lakhs. And that's down about 10% compared to October and 23% from the same period last year. Now, while this data will hardly tell you the overall job creation in the country, because the proportion of informal jobs in India is very, very high, but it does give a sense of the formal economy where workers have some social security benefits and so on. Now, out of these new jobs, only 26.3% belong to women and young people that are aged between 18 to 25 years that represent the labor force typically entering the market for the very first time. That constituted more than 57%. But if you were to look at the net payroll additions, and by that I mean the number of new subscribers, the subscribers that exited, and the old subscribers that returned to the EPF fold, that increased by 8.1% in November at 13.95 lakhs from the previous month's 12.9 lakh. In terms of the net new additions, women represented just about 20% of the jobs, and among states Maharashtra led. Collectively, the top 5 states of Maharashtra, Tamil Nadu, Karnataka, Haryana and Delhi constituted about 59% of the net additions. Now, because this net payroll addition data is revised very frequently as and when the records are updated, we've looked at the new jobs to get a better sense of the economy, and that picture is not looking very good. But if you look at the net payroll addition data, that indicates that in the first 9 months of this year, we have already crossed the figure that we recorded in FY23, and recent government reports also maintain that the EPFO subscription base that has been expanding year on year, and exits have been coming down, at least as of the first half of this year.
All right, Ritu, many thanks for joining us. We will head into a break, but up next, Devotees throng the Ram Temple in Ayodhya as it opens to the public. We get your ground report when we return. Well, the temple town of Ayodhya witnessing something it's never experienced before. As expected, a sea of devotees have thronged the city to get a glimpse of the Ram Lalla idol as the temple opened for public viewing. According to authorities, around 3 lakh devotees have taken darshan so far. A similar number are waiting to visit the temple. The consecration ceremony was attended by India's top business leaders, including the Ambani family, Bollywood celebrities, sports personalities and many others. To control the rising inflow of devotees, the Ayodhya district administration has deployed special officers at different places to ensure there is orderly movement. Shivani Bazaz gets us more on what the authorities are doing to cope with the massive crowds.
Well, I wouldn't call it anything else but a sea of devotees. A day after the Pran Pratishtha ceremony, a wave of devotees have made their way to Ayodhya's Ram Mandir, seizing the opportunity as the temple opened its doors to the general public. Now the scene outside the temple where I am standing, around 500 meters away from the Janmbhoomi temple, is exceptional. Significant gathering of devotees comprising of locals as well as individuals hailing from other states. Now vigilant security measures have been put in place to ensure a smooth and secure transition for the worshippers, but clearly it seems too much for the security personnel at the moment. Officials say that an extensive queue spanning several kilometers began to form in early hours of today, and the influx of devotees has prompted the need for a meticulous crowd management plan, and the officials say that the authorities are working towards it. Now the temple authorities facilitated entry in batches, yet with the increasing number of people and devotees coming in, security personnel found it necessary to temporarily close the temple gates to maintain order and regulate the flow of crowds. Meanwhile, police from neighboring districts such as Barabanki also extended appeals to devotees, urging them to avoid overwhelming the route to the Ram Mandir. Now, subsequent diversions were strategically implemented to streamline the movement of devotees towards the sacred temple town. But overall, as you can hear behind me with chants going on, the mood among the devotees is celebratory, and officials suggest that the sea of devotees is only going to become bigger.
Well, celebrations continue there in Ayodhya. Shivani, many thanks for joining us. With that, it is time for us to wrap up this edition of Business 360. The news will continue. Stay tuned to CNBC-TV18. We're back in a minute with plenty more.